Well, crop insurance is an important part of many farmers' financial toolbox, and it will likely also play a significant part of the next farm bill. Joining us now to review recent crop insurance court cases is Roger McEowen with the Washburn University School of Law. And Roger, as always, thanks for taking the time to chat with us this morning. What are the latest developments in regards to crop insurance?
Well, good morning, Janet. Good to be with you. There have been several in the recent months, and I cataloged these in a recent blog post that I did. One has to do with whether and to what extent you can rely on the crop insurance agent's representations concerning the policy and what's covered. Another case involved the issue of conditions that have to be satisfied before the insurance pays out. And then yet another one on what's known as the APH Yield Exclusion and computation of that. And that was a particularly big, important decision for winter wheat farmers down in Texas and elsewhere across the country.
If you would explain the APH Yield Exclusion, how exactly is that computed and how does it impact growers?
Yeah, that's a big issue. That was a provision that was included in the 2014 Farm Bill, and APH stands for Actual Production History Yield Exclusion. And what that does is that it allows an eligible producer that's been impacted by severe weather to receive a higher approved yield on their insurance policies through the federal crop insurance program. And the way it works is by allowing a farmer to exclude yields that occur in a particularly bad year, such as those where they've had a natural disaster or other extreme weather event or drought or something like that. They get to exclude those yields from their production history when they calculate the yields that are going to be used to establish their crop insurance coverage. So the level of insurance that's available to them is based on their average recent yields. And if you drop out that low yield, if you're not able to do that, then that's going to reduce your level of insurance coverage. But if you drop it out, it's going to increase your insurance coverage in future years. So the farmers that were eligible for that exclusion when the county yield was at least 50% below the average of the immediately previous 10 consecutive crop years get to use that provision. And so we had a case on that, and the court said that that the USDA had to drop out the bad year effective for 2015.
Of course, as we mentioned, crop insurance is certainly a top-of-mind issue for growers, especially now that we've got the Farm Bill conversation taking place. What do you think is the big takeaway? What do producers need to keep in mind as we head into now harvest?
Yeah, I think big takeaway on crop insurance, a couple of them. One, watch to see what happens with respect to the 2018 Farm Bill discussions, because it is a very important piece of the Farm Bill. And secondly, remember that a crop insurance contract is just that. It's a contract. And so you have to meet all of the provisions and the requirements and the conditions preceding to get coverage under the policy. And that's very important. So make sure that you understand the policy before you sign it.
All right, Roger, as always, thank you very much for your insight. Roger McEowen with the Washburn University School of Law on the phone with us this morning from Topeka, Kansas.